All right, good afternoon. Welcome back here to Trader Money. Great to have you aboard. Let me just double check. I'm going to wait for the thumbs up here on the video stream. Make sure we're up and rolling here. My apologies. Okay, and it looks like we're good to go. All right, let's go out and do a couple things here. Let's start with Micron. Up here about 211 here with Micron. Now, I mentioned this morning in my note that Micron was going to have an issue with upcoming Intel earnings tonight after the bell, and yeah, what do I want to do? How much do I want to, do I want to adjust it? And the only reason I'm thinking about an adjustment or going to adjust it is where the challenge is in the fact that we put more cash into this than what the challenge warranted, and based on the option. So what I'm going to do is I'm going to trim some of that cash out by simply trimming 3 contracts. So we'll continue to run with Micron as it is on the board right here, right now, and then just take those 3 contracts off and look to just have that for cash for the next signal. Now there is not a new signal on the board right here, right now, but this is all. That's all I'm going to do here. So let's come in here to Micron and 276 to 278, and I'm just going to cash out. Let's see here. Pardon me, my thinkorswim's a little bit slow here. I'm just going to trim out 2 of the contracts here. -2, right? So just trimming out 2 of these contracts, and that's going to leave, that's going to shrink our delta just a little bit, but it's also going to leave it in a spot where I do have enough for another trade with the cash that's left over here. So let me just confirm that. So, peeling what, 500, 600 bucks out of it, somewhere around there, just shy of 600. So 2 contracts at 276. All right, 2 contracts at 276. Let me make sure the alert goes out. And again, that's only 2 contracts at 276. And then we'll go and adjust the spreadsheet. All right, there we go. So that is out and rolling. So let me just copy this line here, and I'm just going to paste it in. We're just going to kind of double it up here, and we're going to just split the contracts up. So 5 contracts and 3 contracts. So we'll do 2 and 6. My apologies. There, 2 and 6. And the 2 contracts here are closed today, 10:24 p.m. And the price on those was 276. Okay. All right. So that puts a couple $100 gain for those two trades, and then leaves us running here with 6 contracts and $1,600 in cash here on those. So about 1,100, a little bit more than 1,100, to play with for the next signal. So definitely enough to go out and make the trade there. So starting to get the challenge back to that 3,000. We were off to kind of a sluggish start, and it really only takes one halfway decent to put us in a great spot. Would be awesome to see some nice follow through on Micron here, but with Intel earnings on the board, here after the bell, and the exposure level that it is, I simply do not want to wake up tomorrow morning and be dealing with Micron down here at 43 and go, okay, well, now we have $500 for the challenge. What do we do? I don't want to be in that spot, and unfortunately, that is a possibility. It is a risk. So now at this point, we wake up, it's down at 43. fine. We have 1,300, 1,400 for the challenge, by the time we sell a little bit for Micron, and you can go play the next signal, and, we get a decent move. We're plenty in the game. So, again, the only time I make exceptions and alterations to the algorithm is to do what? It is to, pull off risk. I rarely make an adjustment to add more risk, and this one's just a risk off adjustment here with Micron. Still like the position. Is still one I think there's a good chance we see Micron back up in the 50s and at least filling this gap. And it is one where if we look at the price levels that we're looking for, 48.39 is the initial profit level. So, we're about $1.60 away from that, $1.70 away from that. So not too far away. It'd be awesome to hit that here tomorrow, and be able to manage from there. All right. I mentioned there are no new signals on the board right now. There are plenty of crossovers though, and I was surprised some didn't trigger. Disney was the one I was surprised on. Comcast, not surprised. Home Depot, no. None of these others really even had a chance. But Disney had a shot. This is one that does have a series of lower highs and lower lows, and one that we saw an upside 3-7 crossover on last week, didn't trigger. So not too surprised to see just a small up and then drop. But last week when Disney didn't trigger, it didn't trigger because the 3-7 and all of that. It didn't trigger because the algorithm basically said, look, the odds of a 2 average true range move are slim. They're not good enough for a challenge trade. And on this downside 3-7 crossover, it's saying the exact thing. The odds for a 2 average true range move to the downside, just not there. And so not going to play it, here with Disney. All right. So, that's those are some of the downside crossovers. On the upside, we have Microsoft, who just had earnings here today. We have Micron with a fresh upside 3-7 crossover on it today. It's not a new signal on Micron, and the reason being is it's almost a 2 average true range move to create that action. So not a fresh signal, but the old signal still in play. And then we do have an upside crossover on GLD. Thought for a sec we might see a bull signal on that here today, but it is not in play there. So going to go into the close here today with the 6 contracts on Micron, and then going to have 1,130 in cash to play with, and the challenge up just shy of 2,800. So it would be nice to see Micron run a little bit more into the close, but either way, we'll see kind of how it reacts to those Intel earnings here after the bell today. Now Ford. Ford reported earnings here this morning, and this is a stock we talked about a while back, and I know it's one that several of you are involved in from an investment standpoint or looking to get involved with from an investment standpoint. And the last time we talked about it, we talked about Ford down here at the 840, 850 level. And my comments were a little bit different on Ford than what they have been throughout most of the last 2 years. And, this is a stock, when it's hit below 8, we've talked many times about the reasons to be a buyer. But there's something that really changed when it came to Ford over the last 3 to 6 months. And it's very simple. And Ford, to me, is a dividend play, right? It's a dividend play. And when we look at Ford's dividend yield, and again, I'm not looking at the earnings, right? The earnings, you could argue, decent enough to be a buyer, whatever, right? But, this is one where if the dividend at 7% is safe and paid, Ford is a phenomenal value right here. If the dividend is cut, the stock price is going to drop 30 to 50%, somewhere in that area, just given where it is, given what's going on. If they have to cut the dividend, it's in trouble. That's a risk factor, and it's a risk factor I've kind of poo-hooed for a long time now, right? But the last time we talked about it, a couple weeks back when Ford hit, back into the 840 level, I brought up a number. And the number is the payout ratio. Now, the payout ratio here is now over 100%, right? It is up over 100%. What does that tell us? That tells us that Ford is having to pay out more than what they're making to cover the dividend. When companies are in that position, it doesn't mean they're going to cut the dividend. In fact, Ford was in that position right back here in 2015, and they did not cut the dividend. They didn't have to, right? But when we see companies cut the dividend, it almost always happens when their payout ratio is above 100%. So the risk of cutting is now significantly greater than what it was in 2016, 2017, 2018, and then for the first part of this year. It is changed. It is different now in terms of the risk of that dividend getting cut. So the way I look at Ford is very simple. If I'm going to buy a dividend play, I need something that's safe, right? I need something that's safe. So I have to do one of two things. I have to go buy Ford, and I have to use some of that dividend, and we'll come take a look at the options here. But I have to use some of that dividend to protect myself. I have to buy some puts, right? I have to grab, some of the puts to just protect myself, and the longer the better. But man, the more time I get, the more I have to pay. I can pay, 50 cents for an $8 put out just, for 2/3 of a year. That eats up every bit of my dividend and doesn't really pay, right? So it just makes it more of a stock trade. So, as I look at it, there's just not a very cost-effective way to buy dividend protection. And so for me, I'm just not interested, in playing Ford for the dividend standpoint with the dividend payout ratio now up over 100%. And it could change and it could alter, and we'll see, what some of the new data looks like. But, personally, I do not believe they will cut their dividend. I don't think that's going to happen. I think the fear-mongering about it is simply that. It's fear-mongering about it. But I cannot buy Ford and sit there and say, well, the risk is so negligible that, I can sleep at night. Because no, it's not. The risk is significant, and it is one where I'd rather go buy Verizon for the dividend, right, and go and collect the dividend on a Verizon than I would for a Ford. And if we look at Verizon, their payout ratio is 62%, which is high. You can see Verizon did have a higher payout ratio in 2013. We do see companies go through higher payout ratios, but I'd rather sit there and collect 4% on Verizon and than I would with Ford. Now, at the same time, I'm not buying Verizon, right? You look at Verizon, you look at when the dividend yield gets down to 4%, the stock tends to hit kind of a bit of a top there. So, I'm not all that interested in, being a mega buyer of Verizon until it has some sort of pullback and the dividend, pushes back up into the 5% area. But from a Ford standpoint, I'd still rather buy Verizon than Ford, even with that, on the table. We go take a look at something like AT&T. We've talked about this, from the dividend standpoint. This is something, very bullish on for the last year and a half. But we got the buyout, or not the buyout, but the activist investor talk, right? And, for me, I'm done. I'm out. I don't want it anymore until it pulls back. Why? Because we know historically that after activist investors get involved, there's an initial pop and then there's a bleed. Then there's a rally, but it takes time, and it's not something that you can look at day after day after night and go, oh, well, is it switched? Is it switched? No, this is a month after month type of type of scenario. So, for me, it's still in its go nowhere phase, still has not had its pullback phase. And, once it has its pullback phase, then I'm interested. But one day or even 2 days of pullback does not a phase make. And so, when we look at these three dividend players, the Ford, Verizon, AT&T, just don't think it's all that attractive right here. And, I think that's some of the investor conundrum out there. There's just not a lot that's, super attractive. And to me, it kind of just looks like one of these markets where you start looking at some of these stocks that have finally pulled back a little bit, the Adobes of the world. I think you can look at Microsoft. You're not going to get much of a dividend here. We go, okay, big bad breakout coming. Twilio's finally had a pullback. Is it ready to finally, get some upside? You look at a Chipotle Mexican Grill. Is it, finally going to get a little pullback? But I think you look at some of these top quality names that pull back a little bit, and those are the ones you run with rather than trying to, pick up a Ford here at this point in the market. All right, but anyway, that's my 2 cents on it. I'm not involved in it, and not looking to get involved with it. I can see why somebody would. And if you can go to bed at night and you can say, look, the dividend's not going to get cut. Ford's a pretty attractive stock right here. Off of these earnings, it's going to have some easier comparables. Personally, I'd rather see it, down at 820 to pick it up. But, that dividend yield makes it awfully attractive there. Okay. All righty. Thanks for hopping on. Have yourselves a fantastic evening, and we will talk to you tomorrow morning. Take care.